Hello, everyone. Welcome back. Another Public Weekly, and this one is going to be a special one. This one is near and dear to my heart because of all the fiasco that's been happening. And I want to talk about it. I've got to talk about it. It's important I talk about it. So let's go ahead and get to this real quick. Before I do, I want to cover the Luna Classic Challenge, the AK Lunk Challenge that we're talking about here. So the Lunk Challenge, as you see over here, basically is my attempt to try to help as a community member do some burns, contribute burns to Luna Classic. And here's the stats you can see on the right. I ran the numbers for last week's episode. Every week I do the numbers. Last week's episode, based on the numbers we got, we're about $16-ish. Because we actually got some really good chat coming from Tron Crypto Tron from the Lily ecosystem. I fortunately will not be speaking about Lily because I think they need time to prove themselves out. So I don't think it's fair for me to talk about it at this point, but I appreciate the chat and I appreciate the participation being here. And then of course the average views and everything else. So I'm saying probably about $16. Just to be cool, I'll just round it up to 20. Why not? So $20 will be burned once I wrap up sometime this coming up week. $20 will be burned of Luna Classic. And I also want to give a shout out to, her name is Lunk_nymph on Twitter. I want to give her a shout out. She's one of the validators. And I noticed some things that she was doing where it seems like she also has the best interest of the community at heart and not greed based. What she did is she set up a wallet, just a regular wallet, and she does deposits into the wallet for people to take. Now, obviously, you're going to have bad actors who avail themselves of this freebie, but it's the gesture. It's the point that she's trying to do something to help community members. And I think that's cool. And I think that's worth celebrating. So shout out to her. Again, that's Lunk_nymph on Twitter if you want to check out her situation. And again, she's a validator. So if you have Luna Classic, I do recommend that you possibly consider staking with her as a validator to support the kind of things that she's doing, because it does seem like she has the community's interest at heart and not just desperate greed. Without further ado, and I won't spend a lot of time on it, well, let's go ahead and look at where we're at in terms of the graphs. We're going to look at Ethereum because I like Ethereum. It's kind of my measure now. I will go to Bitcoin every now and then, but I think Ethereum is the best measure of what's going on in the business. If you notice on the graph, I'll zoom out to the 1 month chart. And on the 1 month chart, if you look at this pattern, to me, this indicates a downward trend. I said this on a couple of episodes. It feels like Ethereum is actually going down. Do I think that Ethereum is like toast and never will recover? No, I'm saying that right now, it feels like it's in a downward trend. And a couple of weeks, like a week or so ago, I started seeing some institutional money start flowing in to try to offset. And I said that it feels like they're just trying to stave off the inevitable. We're still seeing liquidations. We're still seeing a lot of activity that, for me anyway, tells me that we're going to be in for a tough Q1. Well, it seemed like December was recovering a little bit to where we weren't getting as bad of situation in December. Well, that's reversed. And now I'm looking at December looking really bad starting as early as next week. Don't hold me to that, but I'm saying starting as early as next week, mostly because of the trend pattern. So it's all around trend pattern. When I look at this, the 1 month is kind of my go-to. I like the 1 month. If I look at the 1 week, it's misleading because it gives you this impression that we're on an upward trend, especially with this pump that just happened very recently. If you look at the 1 day, everything looks all magical, right? We're coming out of it. But if you look at the totality over just the day, it's not in a positive state. But I look at the 1 month because the 1 month gives me a clean picture of direction. And as I look at the direction and I see the level of dumps that's happening at periods, I'm seeing excessive pressure to go down. That's where my predictions are coming from, is the pressure to go down. It doesn't mean that it is going to go down. It's saying that that's what I see, at least on the surface, that it looks like this business wants to go down. And as a result, I'm greatly concerned for the long term, and hopefully I'm wrong. I truly wish and hope that I am incorrect in my visual assessment of the graph, but I'm going off what I see anyway, that it doesn't look good from my eyes. So now I'm seeing sometime in December, probably mid-December, but I'm thinking as early as next week, but mid-December probably-ish, I'm seeing that we're going to be somewhere down here-ish, so somewhere between 11 and 1,000-ish. And again, you might think that's extreme. Consider when this dump happened, we got as low as 1,100, right back down here-ish, 1,100. We rebounded up to a point. We got to 12.7. Then over here, it was down to 12.18, dipped below the 11. Then it got, and now we're at the 12.8. So if you go off pattern here hits 11, pattern here lower than 11. So what's the logical next? That's where that's coming from. And by the way, I'll just warn you, I'm dealing with what appears to be a chest cold. So if I do pause and breathe for a bit, that's where it's coming from, because I had to take some medication to stave it off so I could talk to you guys. But that's where that prediction is coming from. If I go off patterns, pattern is the next should be a drop and should certainly go lower than 1,009. That's where that's coming from. That's the estimation anyway. Could something come along that derails that? Absolutely. And let's hope that it does. Let's hope that we get some catalyst that stops us from going too far down and actually gets us to go thrive up, because I think everybody kind of wants that. So that's what's going on with Ethereum. And then if I go and look at Bitcoin, Bitcoin is roughly about the 17,000 mark. It had a similar pump just very recently. It wasn't significant, but visually it looks like something's happening. Again, I go to the month graph though, and it's the same thing. So it goes here, dips as low as 15.8. So right now we're 17, goes as low as 15.8. Then the second one, it goes lower than 15.8, goes to 15.6. So the logical is that it's going to go even lower on the next dip down. If everything is correct and I see it correct, and I can't say I do, I'm saying that's what I see, that we're next going to another threshold. It's fighting to go down. It's bottom resistance testing that I see it's going to go down, and it's not going to sustain unless it's got some really good catalyst that derails it. The other thing with Bitcoin, not Ethereum, but Bitcoin, is it doesn't look like Bitcoin is going to be able to recover very strongly compared to what's going on. So if I'm right, and I can't say I am, but if I'm right, we've got some real troubling things on the horizon, at least in December, and hopefully I'm wrong, because I want to be wrong and I want everything to look good for the foreseeable future. Q1 still is not looking good, and I don't know what that means for everything, but Q1 is still in a very troubling situation as well. And that's my delivery, so no problem. So that's around the financial side. Let's get into a little bit of news, bits and bobs. These won't take that long, and then we'll get into our special here. Compound, if you've invested in Compound, I don't know if you're aware, I sent this out on social media, but Compound, there's a subject of a class action lawsuit. And it's really around people in the lawsuit say it's a pump and dump. The people who have the wealth, the whales, as they're called, the theory is that they're basically holding down profit potential for all other investors, even though Compound has been pitched and marketed as having strong profit potential, that it's really not true. I do not have significant in Compound. I have a small amount that was really just to kind of watch price movement. I have not significantly done anything with it, not because I think there's anything wrong with it, but simply because my investments are in a different direction. So for me, it wasn't necessary, if that makes any sense. So my impact is very small, but I'm calling this out just in case if there are people who invested in Compound. This is something you may want to be aware of, at least, that this is a thing and what that means. So there's not a lot of information out there, but if you just do a search, web search for Compound token investigation class action, you'll probably get a bunch of hits. That'll give you a little bit of information about what this is all meaning and what this is all doing. So that's up to deck there. And then the other bits that's going here, Ted Cruz. I said Ted Cruz before. Ted Cruz has bags of Bitcoin. I said that multiple times. He's got bags of Bitcoin. He openly admitted it. They have to disclose this. He's bullish on Bitcoin. What they want to do is, I said that like places like Montana and others are trying to welcome crypto mining. So I also said that crypto mining, ultimately, there's a lost opportunity if we try to ban it and just energy uses. We're missing opportunity. We're missing jobs. the bills, the taxes. There's all sorts of opportunities that they're missing, right? Texas believes what I'm saying is the truth, and they want to entice these to come aboard and come to Texas and bring their operations with them to leverage. And he knows he wants the tax revenue. That's what he wants. He wants that money. Yeah, that's what he wants. Quote, the beauty of it, as in Bitcoin mining, is when you got substantial investment, as we do in Texas and Bitcoin mining, when you have extreme weather event, either extreme heat or, which is frequent in the state of Texas, or extreme cold, sometimes Bitcoin mining can be shut off in a fraction of a second, making that electricity immediately available to the grid to heat or cool people's homes, keep people's businesses running. That's an enormous reservoir of excess capacity. Now, there's a fallacy in what he's saying, because it's not really excess capacity unless they're using renewable sources, alternative sources, as in they're not on the grid fully. So let's say that a Bitcoin mining facility is using, solar panels and everything else. If they're using those alternative sources and they're storing it, then yes, you would have reserves and you could tap into it. That is true, but many of them don't. So it's not necessarily true what he's specifically saying unless it's built a certain way. Quote, I like Bitcoin as in Cruz because the government can't control it. So he likes it because it's open. It's a commodity. It's free trade. It's not. Now, let's be honest. The government does control Bitcoin to some degree, because Gary Gensler and Jerome Powell and Elizabeth Warren and whoever else come out and say a thing and kill the business. So there is some form of control. But I think what he's referring to is the sense that you can't limit the access to it, at least not yet. We know at some point they're trying to get to that point. Just right now, that's not the case. Quote, I think Bitcoin means investment. It means opportunity. It means prosperity. It means financial independence. I also think the rise of Bitcoin mining in Texas has an enormous positive benefit for resiliency of the grid. Again, I disagree with what he's proposing unless it's built a certain way to make it a true reserve of store of energy. Then yes, you could make a case. You also could make a case that if it was architected correctly, you could use Bitcoin mining to generate energy, but you'd have to architect it a very specific way. Right now, Bitcoin mining consumes energy that by design. If there was some way to leverage the excess energy and the excess waste done by mining to where we could leverage it to create a store, then yes, what he's saying would be the truth. That would cause a shift. I think it's a great opportunity. Nobody's ever leveraged it, far as I know anyway. So speaking of this whole mining business, right? When we're looking at the big picture of crypto mining, right now, Bitcoin is the only one primarily. I mean, there's others like, Zcash and others, but, let's be honest, Bitcoin is the go-to. When we're talking about those, we're talking about it's getting harder to mine. So that's number one. It's getting harder to sustain as far as energy usage, et cetera. It's hard to justify it, hard to make a case for it. All of these are well known. All of these are just kind of a given. Yes. So since we say that, we have to open up the question of, is mining, targeting mining, focusing on mining, a fixation on mining really the right answer? Or is there something else that we should really be focusing on? And I don't know what that answer is. I'm saying that Bitcoin mining is all this great magical thing, it could be. It's not right now. And with mining getting harder, it may become a Pyrrhic victory, as in you're not leveraging the benefit you could because mining is so difficult by its nature. It's built to be difficult to mine now because it has a constrained supply. There's not a lot of it, and it was built to be more difficult as you did it. Well, it opens up the conversations to say, maybe we need proof of work in a different form, just not the way Bitcoin's doing it. And to my knowledge, no cryptocurrency has done it the way that you would propose to do it that would have the same value proposition as a Bitcoin. So until you have that, I'm not sure that any of what they're talking about is really going to make a dent in much of anything else. Then if you're in or monitoring or bullish on XRP Ripple, there's some news on there. They're talking to the SEC. They're saying, look, they've not shown any evidence that these are securities. They've not shown any evidence these are investments. They've not shown any evidence of anything. And of course, there's been multiple wins for this. And the SEC has pushed back and said, look, you can't let them get away with this, because if you do this, the Howey test becomes worthless. I said in one of my earlier ones that the Howey test has never been modernized to include cryptocurrency. That's still the case. It's never been modernized to include cryptocurrency. As a result, they're trying to force cryptocurrency into the model, which makes it very difficult because essentially Bitcoin would be the only thing excluded from it as a true commodity, because Bitcoin, there is no expectation of any profit due to in of itself. It's just a commodity. You trade it, buy it, sell it. You can do, certain leverages and that sort of stuff, but that doesn't guarantee you any sort of profit. And as a result, the risk of win or loss is really around your trading strategy only, not due to some outside force. Like there's not some company where they're promising you they're going to build a thing and then they don't do it and then the price craps, right? Like Satama. So what they're saying here with XRP is, look, they've not proven anything here. Bottom line, they've not proven anything here. And they're trying to force feed this into the Howey test. It ain't going to work. There's no proof of nothing. Let's get a summary judgment, make this go away. This is going on too long, and it's been going on a long time. And the SEC is also on the side, still pushing back, trying to force it in there, where Ripple's basically saying you can't satisfy that test. So we need a summary judgment, make this go away, make the call. And the judge, who has no balls, is not making the call that would make the whole thing go away. That's the frustration now spinning around with XRP and Ripple, is the fact that we believe that this is done. It's a done deal, and we shouldn't be sitting here spinning wheels on this crap as much as we've done. And so make it go away. What do I think? I believe, and I've always believed, that anything that's not Bitcoin and is proof of stake, at least, arguably could be classified as a security underneath the way the Howey test is written today. And until they rewrite it, you're still going to have that same situation. So I don't know what that means long-term for cryptocurrency. I'm saying that right now, I see that, yes, there is a case to be made. Now, the judge is the one who has to make the call. And I don't envy that judge's position in the big picture. Now we're going to get to our fun stuff. Sam Bankman-Fried, who I refer to and will refer to as Poof Hair going forward. Sam Bankman-Fried recently has been doing a suite of interviews on behalf of FTX, in this case, in his role. And FTX, I'm not going to try to summarize the chaos around this business. What I'm going to do, he did an interview on New York Times with Andy Sorkin. I'm going to try to go through, and I pulled snippets of what he was talking about, and I'm going to do analysis on what he said. Here's a summary statement, though, about body language. From a body language perspective, I didn't see lie from him. From a body language perspective, he's actually very practiced in trying to not say the wrong word and get himself in trouble. He's actually very practiced. He knows what he's saying. He knows what he's doing. He's saying what he wants to say. He's saying what he wants you to hear. So understand, I didn't see lie from him. I see that he's very practiced. He's very methodical. So it doesn't surprise me that, I believe her name is Caroline, was charmed by Poof Hair because he's very practiced in the way that he speaks. Now, you hear me speak. Obviously, I can speak straight off the cuff, and I don't have to pause, and I can look you straight in the eye when I do so. His looking down, when he's doing that, he's thinking, he's processing. He's processing the right words to say to make sure he gives the message that he wants to give you. It's actually very psychologically brilliant the way that he's doing it. It just so happens that I talk off the cuff. I'm already knowing what I'm going to say to you long before I even say it. So then in this interview, there's all these different quotes that he puts out, and I'm going to go through these because I think it's important that we understand from my perspective, not only as an auditor, but in financial business, in all the stuff I've done, technology, what my thoughts are and what he was saying. The first thing he said in one of the paragraphs was, quote, "At the end of the day, I was CEO of FTX, and that means whatever happened, whyever it happened, I had a duty." Him saying this up front, here's what I believe it means. Him saying it up front to me means that he's not happy about what happened. So I'm saying I don't see malicious intent behind the fact that he put this up front. Like, think of John Stumpf from Wells Fargo. John Stumpf went up in front of the frickin' Senate and lied to their face multiple times with that whole business and had no problems doing it, even though the buck stopped with him. He deflected and blamed people that work for him. Well, that guy, they were supposed to do that. That lady was supposed to do that. He blamed everybody else but himself. At no point did John Stumpf own that he screwed it up and he empowered it. Jack on Twitter, during the fiasco when he was in it, at no point did he own what it was. After he leaves, then he's like, you know what, that was my fault. What about when you were in it, dude? He said this lady over here that was doing this stuff and banning accounts and deleting accounts and approving all this stuff, he said, I didn't know that was going on. He deflected blame. And this is on the Twitter side, right? Now, that whole Twitter files, and if you didn't get a chance to read that, I encourage you to do so on Twitter. Elon, I know it was him. Elon leaked all this trash, arguably trash, around what was happening on Twitter. And the fact that you have a company full of this and they're doing these actions. So in this case, they're full of people who are largely liberal, largely left-leaning. Well, that speaks to your hiring process and everything else, because that means you purposely entice those people. Well, you might have rejected people who are on the other side of it. That's a whole different ball of wax. The point is, Jack allowed all that stuff. He knew it was happening. It's Twitter. It's public. He knew, but he swore he didn't. Whereas with him, he says right at the front of the freaking interview, the buck stops with me. I had a duty. I didn't do it. To me, malicious actors aren't going to do that. Malicious actors they'll Chewbacca. They'll lie straight through their teeth at you, and they'll never own when they screw up. Think of crypto projects. I talk about it all the time. The Libero ecosystem to this day will never acknowledge that they screwed up Libero, which was actually a successful project. The car salesman on Seifu will never acknowledge that he screwed the dang thing up and continues to do so. Like that's a crypto mentality, right? They all do it. He's doing the polar opposite right at the front of the thing. To me, that's not malicious. To me, that's practiced. He knew ultimately it was my fault. Bottom line, it is what it is. This is not a defense. I want to make sure you understand why this is so important, why I wanted to go through this, because him doing that told me, okay, so it wasn't malicious. So what was it? Next, quote, the US platform, so in this case, FTX.us, is a US regulated platform with American users. True. To my knowledge, as in him, that's fully solvent, that's fully funded, and I believe that withdrawals could be opened up today and everybody could be made whole from that none of these problems plagued the US platform. This is true. FTX.us didn't have the issues of the main FTX. Here's the reason why. The reason why is because on the international side, so the regular FTX, the regular international and most all exchanges are like this. They're more flexible about things like leverage, things like longs and shorts, how much you can extend yourself. And if you don't know the longs and the shorts and all that terminology, here's how it works. Let's say there's a cryptocurrency that you think at some point in a near or distant future is going to be something. Let's say you got $2,000 to work with. Leverage says that we'll let you spend basically however much times what you got so that you have a bigger position. So if I have 2,000, and if I go off what he says, quote, for what I've been able to see is roughly that a year ago, Alameda Research had, I think, something like, he means 10x leverage, 10 times the assets of the position it had on. So if you had 2,000 and you have a 10x position, you're being lent 18 grand. So your total position is 20K, even though you're working with 2 grand. You might wonder, well, where the hell is that money coming from? In exchanges, what they'll do is they'll say, you as a holder, you can let us borrow your cryptocurrency. And by letting us borrow your cryptocurrency, other people can borrow it from you to increase their positions. And in exchange, we'll pay you basically interest, like a real thing. We'll pay you interest on your assets you put in there. So let's say you put in USDC and you put in 10,000 bucks worth of a thing. It's making money for you because others are borrowing your assets in order to increase their positions to do this. Here's the flaw. That assumes, based on your position, it assumes the price is going to move where you want it. If it's a long, you're assuming that, yeah, at some point it's going to go up to a point or drastically beyond a point. If it's a short, you're expecting it's going to go down for the short term. But if it's long, that's where this true risk comes in, and they assume that you're going to do a cutoff, right? Do a stop loss or a limit, do something to make sure that you're not going to get quote wrecked if you're wrong. If it sounds like a form of gambling, that's basically what it is, because you're gambling that price is going to go up. Well, we know, we've been in a bear for the long freaking time. We see these pumps happening, and I just talked about it. There's a thing called a bull trap. What that is rich people who will do enough to pump the price just enough to trick people to FOMO in or create positions, and then they'll dump. What they're doing is they're trying to trick you into making a move when it's not quite time, because it's a trap. It's a trap. It's not going to sustain. There's not sustained traffic to get it to that point. So you might be putting the long out that Bitcoin's going to go back to 19 grand, let's say. Well, if Bitcoin goes to 16, you're going to be in trouble because not only do you have to pay back whatever the additional leverage was, you're also going to lose your assets that you had. That's the liquidation that you hear about. So now the liquidation triggers a sell because it's selling of assets in order to make this person who lent you that whole. The exchange has to have reserves. They have to have reserves available to be able to pay this all stuff back. So what he's talking about is Alameda Research, and we'll get to why this is shady. Alameda Research, he saw after the fact that Alameda Research had a 10x position in what it was doing. Here's why it was so sketchy and shady. Quote, you look at what happened this month and a few days in all out, PR assault, which led to a total market collapse in a pretty short period of time, no bid side liquidity. This is a Chewbacca now to a little bit. It's a little bit of defensive. What he's saying is, it was made worse because the PR nightmare. People were talking about it. They're saying it's a scam. They're saying it's a Ponzi. And because they're talking about it, it caused a FOMO sellout because they think there's shady stuff going on there. The truth is, what really triggered this to be worse than it was his connection with Alameda, which I'll get to in a second, number one. Number two, the fact that they were locking assets down randomly. Number three, apparently the company's completely bankrupt. And now there's all this asset, like what the heck? We're talking billions of dollars here, billions and billions of dollars. And that's what really caused it. It wasn't the PR nightmare. Plus he put a tweet out that basically says, we don't commingle assets. We don't do this. We don't do this to do, when that's actually essentially what happened, which you'll see here shortly. Quote, I didn't knowingly, keyword there, knowingly commingle funds. And again, one piece of this, you have the margin trading. You have customers borrowing from each other. Alameda is one of those. Here's the shady again. If you didn't know, Bankman-Fried owns a majority position in Alameda Research. Alameda Research, the CEO, was his ex-girlfriend. And apparently, two of the people from Alameda were living with him in their Bahamas getaway, Bonnie and Clyde mansion out there, living it up. So he holds a majority position in this organization that was borrowing money within this FTX that he also owns. So if this is all sounding shady, it should, because it is shady, because there's no reason that you would do this if you're competent. And I want to get to why I make a distinction and why I said up the front, I don't see malicious off his body language, at least. It's about competence. But I also said incompetence is just as dangerous as malicious. Quote, it seems like Alameda had margin positions open with them. And by them, he's referring to the Voyagers of the world, the Celsius, et cetera. Anybody else that lets you borrow. What he said was they apparently had margin positions open to all these other ones. When they shut down, Alameda dumped out and shifted the money, all of this burden over to FTX. Quote, and that it's likely moved a bunch of that over to FTX this year when they shut down. Well, why is that a problem? If I had borrowed money over here, so I had a position over here, it's, let's say 5X, I don't care. I have a position over here. These are insolvent. So you expect somebody not going to get paid back. You dump out, you take these, in some cases, ill-gotten gains, and you go over to FTX, which to that point didn't have any hint of a problem. There's this major deposit of assets. And we're saying that nobody called out a red flag, no system flagged it, no system blocked it, no system rejected it, no system questioned it, no person questioned this massive, what had to be a large deposit. Because remember, FTX was close to $35 billion. So if we're saying that this one transaction was ultimately responsible for the crash and burn of FTX, we have to think that the dollar amount that Alameda shifted over was pretty damn substantial. And we're saying there was no flag whatsoever on that transaction. I'll tell you this, Coinbase, right? Coinbase, and of course I'm on the consumer side, but Coinbase, if I ever tried to deposit any more than probably 25 grand, Coinbase will just tell me, absolutely screw you. No, even at the highest level, you're probably not going to be able to get more than 500K, maybe $1 million if you're on a high level. Think about how much money was allowed to go in with no restriction, no flag, no review, no block. And you start asking questions like, how is it possible that there was no, wait a minute, what the heck's going on here? And making sure you got the assets ready to go. This is what spurred the additional discussion around proof of reserve. Do you have enough to sustain what's coming in at any given point and enough to pay people out? I ultimately don't think that mattered here. I think what really mattered is, why didn't you flag it for the amount that it was, regardless of whether you have reserves? Because it's sketchy. If we're talking money laundering, how do you know that that's not some criminal enterprise that's shifting money through your stuff? And you're just saying, yeah, whatever, do. Quote, there is a substantial discrepancy between what the audited financials were versus what the dashboards that we had displayed for Alameda's account there, which substantially underdisplayed the size of that position. So he's talking about audited financials, right? So here's what's on the books that's been reviewed versus the data that Alameda then later showed. And when he says dashboard, this is something they probably built and developed internally. Question again, why was nobody looking at that dashboard this whole time? Why was nobody checking and verifying what that was doing? Why was nobody verifying the source of money? Why wasn't anybody doing any vetting? If you're going to build a dashboard, why was nobody using it? It didn't make any sense, right? Because if it's so large that it could technically kill your business, wouldn't that be a red flag off the jump? But to just let it slide is suspicious, at least to me. Quote, I did live with one or two of members of Alameda for a little while. I was viewing it primarily from the trading volume perspective. I was a large owner of, in this case, Alameda. That's true. And I had a lot of exposure on that side. So in his mind, what he's saying here is, you know what? I have this majority ownership on the Alameda side. I have this FTX. It's a fledgling business and I want to grow it. I'm living with these people because I have to be involved with the Alameda because I have a majority stake. And so it's convenient just to be living in the same house. That doesn't make any damn sense to me, but whatever. The point is, he, in his mind, well, just live together so we can talk it out, plan together, and I can at least be aware of it, of what's going on. However, he would contradict himself, because if that's the case, then why were you not in the loop when Alameda's doing this stuff? Because this transaction happened and he said he didn't know. He said he had no idea what was happening until after the fact. You can't have it both ways. Think about it. If you're living in this, as people call it, an F house or frat house or whatever it was in the Bahamas, with this girl who is running your business that you're a majority, he has 90% stakeholder. If you're a majority owner of this business and you're living in the house with them, you're telling me that at no point did you talk about any of the stuff that's happening? At no point on the FTX side did you look at no reporting, no data quality, no flagging, no system, no nothing about this large transaction of allegedly shifted money from other leveraged positions, aka ill-gotten gains. At no point, nobody looked at anything. Nobody knows that, like Wesley Snipes. Nobody know nothing. That's where I'm like, okay, this is weird. It's weird hearing him. He admits it, but it's weird hearing him say that he was living with this person who was the CEO of the business he is majority stakeholder on, and they never talked about it. They never even just had over breakfast, just say, how's that freaking Alameda going? I'm not going to get into business, but just so we know how it's going. And it was never heard any details. And then on his side, on FTX, never reviewed any reports, never reviewed any queries. I find that really strange. Quote, I was nervous about a conflict of interest between the two, as in the two companies. And so was pretty intentional about not being very involved in what was happening with Alameda. That's fine. But when you're a majority stakeholder in Alameda, he was a 90% stakeholder. You have an interest because you're a stakeholder. The whole point of a stakeholder is to benefit from its profitability. So you obviously had to have some interest. Otherwise, why did you invest to be a 90%? If you didn't really care to the degree of monitoring it, why wouldn't you just decrease your position or at least exit it full throttle if you were really concerned? Why would you keep to 90%? I don't believe this as he states it. I believe what he's talking about, yes, he didn't want a conflict of interest, but I believe really the truth is he just kind of sat back and said, if I make money, I make money on the 90%, and it is what it is, but that's not the role of a majority stakeholder. Majority stakeholder is kind of the buck stops with you there too, dude. It stops with you there because you're a majority stakeholder. It kind of goes to you, and you should have been involved in any major decisions that would have, crashed the freaking company. Because think about it. If this was a regular company outside of cryptocurrency and a major stakeholder completely did nothing while the business crashes and burns and still profits potentially from that would never be allowed outside of crypto bubble. Quote, We scroll back to 2018, 2019, I guess. FTX didn't have any bank accounts. It didn't have any bank accounts globally. We were trying to get them. Some, in this case, US customers, were wiring money to Alameda Research to get credited on FTX. Now, there's no way a customer could have known that this organization handling billions and billions of dollars had no bank account. Now, it begs the question, where the hell was the money being stored if it wasn't in a bank? If they had no bank accounts, where was the money being stored? If you read between the lines of what he's saying, he said FTX didn't have any bank accounts. Chances are they were sitting in his personal accounts, either his personal accounts or they were all just only in Alameda, because he says that U.S. customers were wiring to Alameda. You might wonder, well, why would U.S. customers wire to Alameda? There are influencers who I will not name, but there are influencers out there who will tell you to just go on VPN so you can get on Binance and FTX, doot. And you've never heard me say such a thing because it's the worst advice you could give somebody. Getting on a VPN, I said it before, going on VPN just to get on these exchanges is setting you up for failure because of KYC. KYC knows where you are, number one. Number two, the other exchanges, the international exchanges, do not have the protections as the US-based ones do. So if you choose to trade on an international exchange, it's on you, which is why I say don't leave it in there, because it's high levels of risk. If you're a United States citizen, you should only stick with the US exchanges. But some influencers tell them to get on whatever via VPN. So what people were doing is they would set up a VPN, set up an account on, in this case, FTX and Alameda. They would wire money to Alameda, which I can't fathom the trust level here, but they would wire money to Alameda so that it could be updated on FTX. Well, ask the question yourself. Why is it that Alameda is receiving funds on behalf of FTX? Why is that acceptable? And number two, why is it acceptable that FTX wasn't running their own bank accounts to store the funds in the first place, and that FTX had no way to receive funds directly from customers? Like if I'm a customer and I'm looking for an exchange and I'm looking for any of this kind of stuff, I'm going to instinctively distrust any sort of exchange where they straight tell me, no, we can't take your cash deposit. We can't take your bank deposit. We can't take your stuff. You got to go over here to do that. No, I'm not going to trust that business. Now, if it's like KuCoin, right? KuCoin will do banks or the other ones, but they're specifically built for that transaction. It's not like some other hedge fund company or something else that you're sending money to get back to FTX. Why does that make any damn sense? At least not to me. Anyway, quote, in Alameda's case, I don't think I was, as in him, was marking collateral assets. He didn't say that, but that's what he meant. He said them. Collateral assets, the way I wish I had from a risk perspective. The collateral assets behind this, what they're talking about. Some customers sent letters and they said, why are you just investing in shit coins as part of your collateral? Because it came out that like Solana was in there, and I think Luna Classic was in there, and all these other ones that they don't make any sense as collateral. They make no sense. Like if you're going to do collateral, you should really use strong collateral projects, not in some cases highly volatile ones or ones subject to crash and burn. I said on one of the early ones that the Luna Classic situation, that had a part to play in what happened, because if he was investing in Luna Classic at the time that Luna Classic was pumping like crazy over, 200 some odd dollars, and he was just banking on the constant uprise, then yeah, it makes sense why that would then put him in a rough spot. And then that helps explain the justification for Alameda shifting over there. Because if Alameda was over here and they were also trading Luna Classic on these other ones, and I can't say they were, I'm saying the timing seems to be a little bit too convenient. If they were trading Luna Classic over here, they shifted off over here, but behind the scenes, he's got Luna Classic as well. So his reserves are crap because he's investing in crap tokens for the collateral. Well, yeah, that's a house of cards. That's basically what it is. So I was shocked to see many of the tokens that he chose for collateral. They didn't make any sense to me, at least. And then the last one, quote, I was somewhat involved with venture investing. This is huge, and I want to follow because this is going to be my wrap up, and it's a big thing. Quote, and that was done out of a separate entity than any of Alameda's proprietary trading. Let me summarize basically what this guy was doing. And this was first done by Andrew Sorkin, and I do recommend that you check out that interview on the New York Times. I think it's, again, I don't see lie from what he's saying. He's telling it like it was. It feels like incompetence. And I'm going to break down why, because this last one was telling. And Sorkin tried to summarize this, and I want to summarize it even more simpler than what he says here. So apparently, you've got FTX. He runs FTX. You got FTX US. It's off to the side, kind of, sort of. FTX US is in full compliance with US laws, which means there's not a lot of leverage. There's not a lot of these, derivatives. There's none of that high risk on the US side. It's still running even now. Main FTX is having these issues. Alameda Research comes in allegedly taking some of their leveraged money and they shift it into FTX. And we suspect that number had to have been pretty dang substantial because FTX had $35 billion worth of assets. Apparently, SBF Poof Hair has his own hedge fund off to the side. And the hedge fund off to the side is investing in cryptocurrencies, borrowing asset money from the people who deposit into FTX. If your head's spinning, don't feel bad because it's the weirdest freaking thing. You as a customer deposit USDC into FTX. He's got his hedge fund over here. He wants to invest in, I don't know, SHIB, whatever, because apparently that was on the docket too. He wants to invest in SHIB thinking everything's going to go back up. So he's investing over there thinking he's going to get this rise of value, and then eventually he'll pay you back. And you don't know this is happening, that your money is being lent out this way. Everything crashes. Crypto crashes. Now he's left in a lurch because he's getting liquidated. So now he's basically, your money is getting taken from him. And now it's a house of cards. It's just draining. If all of that sounds crazy, nuts, bolts, that's what essentially happened here. Is he was using the depositor's money on this other to try to essentially gamble. Because let's be honest, that's really what it is. In the terms, some of the customers said, your terms specifically say you're not going to use our money to do that. He said in this interview that, no, why I didn't use your money to do that. I didn't do. FTX didn't do that. And that's where the wordsmithing comes in and why I said he's very methodical about how he words things. Because what he's saying is that FTX didn't use your money anyway. Alameda was in there as a regular, so basically it had its own assets and it deposited them so it could collect the APR. FTX was also had its assets in, collecting off the side. Hedge funds in, collecting off the side. Hedge funds borrowing from this. Alameda's borrowing from this. They're all borrowing from each other because at the point they're off investing on something else. They expect to get a return to pay it back. I want to describe what that is. That's essentially a pyramid scheme. Essentially. It's not really a Ponzi scheme because it's dealing with different entities. And with the different entities, we're not talking about like using the money directly as in you lost it. They didn't lose it. It was still in the reserve. But the problem is it's a pyramid scheme because none of it works without FTX's involvement. None of it works without FTX's central involvement and availability. If FTX wasn't in the mix, Alameda would have been left to get screwed on all the other stuff they were doing. If FTX weren't in the mix, his hedge fund has to go it on its own. It's not able to borrow other people's freaking money to do it. It might be able to borrow in other exchanges, which would be regular investors' money as whatever. But then if they don't pay it back, they have to pay, like let's say Binance.com. If I put my money in Binance.com and or his hedge fund is on Binance.com as one that's trying to do longs, that's fine. If he doesn't win, he's got to pay you back anyway. He's going to get liquidated. He knew what he was doing. He knew what he was doing because he had purposely built it to borrow money from FTX, even though FTX's whole deal was only supported by Alameda's deposit. That's a pyramid scheme. Bottom line. So when I said up at the front, when I read his body language, I don't see lie. I don't see malicious. I don't see that he was purposely trying to rip people off. If I had to read it, he probably has some sort of a gambling addiction where he got so deep in it that by the time he realized that it wasn't going to work and the house of cards is about to fall, it was already too late. This was to me, it's a pyramid scheme, bottom line pyramid scheme in the finest definition of said, where he got too deep in it. And because it was too late, all hell broke loose. And what made it worse is him being a majority stake in Alameda, the company that did this major deposit in, and he had apparently no awareness of what was going on by his own words. And I believe he didn't. I believe he blindly trusted something because he was over here living it up on the hedge fund because he had gotten lucky before, probably off shorts when things were crashing. That's my guess. Then you take the element of him allegedly living with people in Alameda, one of which was his girlfriend. And now things start to get sketchy because you're living in the same home as this situation. And on the surface, it looks like there's impropriety. It looks like you guys are basically wash trading off each other. I don't know that that's what happened. I'm saying that's the appearance because you were living the frick together. And at no point did it ever occur to him, I probably shouldn't be living with the person who's running this business, who's allowed to do these deposits because of the impropriety. He says it himself that he didn't want to have the appearance that there's any sort of, collusion or commingling. What do you think's going to happen if you're living in the same freaking house as these people? That's where I believe, because of his age, number one, I'm not going to criticize the hair here, but because of his age, number one, I believe because of the hype. So in other words, Jim Cramer called this guy the JP Morgan of crypto. When you get people who give you a big head, when you get this spotlight, he was in front of Senate, he was on interviews, he was on the news, he's on all that stuff, and it goes to your head. And when you're young, you don't understand how to manage it and how to handle it. So I actually even said on another episode, somebody should probably check him for suicide watch, because it wouldn't surprise me if he ended up being suicidal. He seems like he's right now composed, but I can see long term, if things start going further south, him being somewhat suicidal. I don't wish ill on anybody. I am saying I don't see malicious of this idiot. I see he's blatantly incompetent, not qualified for this, in over his head. His freaking parents are law professors at Stanford. So nobody can tell me he didn't know. Nobody can tell me that he was just blind to it. I don't buy it. I believe he was arrogant. I think he ran with the arrogance. I think he ran with the fame. I think it got to his head, and I believe he might even have a gambling addiction. And as a result, he got caught with his pants down and a jar of Vaseline off the side. That's what I believe happened here. I don't see malicious off him. I don't see that he was trying to be a criminal. I think it got too far. And he even said in one interview, like, screw regulations or whatever. He was banking on the fact that it's an unregulated business, and he felt like he could get away with stuff. When he started seeing the crash and burns of the Voyagers and the Celsiuses of the world, that's when he started to get a little bit worried. But by then it was already too late. He was already too deep into it. He should never have gone that far, because he probably would have made more money doing it on the legit than the way he did it. He probably would have made way more money. He had an opportunity to make way more money if he just done it right. But greed got in the way. He even called out, on the international side, you can do whatever you want. We have no regulatory restrictions on the thing. He purposely set up in the Bahamas to duck United States laws. He set up FTX.us only because there's Binance.us and he was trying to compete. He wasn't working under the intent of doing it right. He was working under the intent of making money. Greed. Greed drove what this dude was doing. Bottom line. And he got to a point of fame went to his freaking head. And it was too much for him to handle because he's too damn young. He doesn't understand because he hasn't lived. He hasn't lived through the bad. He's going to live through the bad now, because no matter what, first of all, he's out putting these interviews out and he's admitting a lot of stuff that's going to get him in trouble. But second, those people are going to need to be made whole. The level of loss here is very close to Bernie Madoff. Bernie Madoff died in prison. And Bernie Madoff would swear, no, I did what was within the bounds and it got out of control. The banks had to know what was going on and they looked the other way. So I kept on going. That was straight out Bernie Madoff's mouth. Bernie Madoff, to the day he died, never acknowledged any sort of regret of what he had done. He said, I went within what I saw. The banks knew what was happening. They didn't do anything to stop me, so I kept on going. That's what he's basically saying. I kept on going, and it was what it was, and nothing bad happened until it did. Now that it did, I'll do what I can to try to make it right. And he said all he has is a credit card with a $100,000 limit on it left. I find that very sad and staggering. With that, that's my coverage here today on this business. And I will shut up and see if anybody has any questions or comments for me in the chats. Good enough. Something comes up after the fact, please do leave it in the comments below. I will check them after they are screened for various spam, but I will check them and release them. Hopefully this has been at least educational or informational, if nothing else. I do encourage you to try to do a little bit more digging on the whole fiasco with FTX. Although there's a lot to it, I think it's good to know, a good learning opportunity for how not to do this business. And I'll maintain, and I don't care who says otherwise, I see incompetence from this idiot. I think he's just an incompetent young kid that should never have been empowered to do what he did. I believe that there are stupid people out there, because I want to know who empowered him. Somebody empowered him. Whoever empowered him, I know BlackRock was involved. Whoever empowered him, they're just as almost cussed, freaking stupid like him. That's the bottom line. I see it. And if Poof Hair himself, SBF, if you happen to stumble across this dude, listen, I would love to have you on the podcast, because I get, you've done a decent job of answering hard questions. I'll give you that, because you've not ducked that smoke, even though I know it's probably bad and your lawyers are probably yelling at you. So I'll give you respect for not ducking the smoke on the hard questions. Like the Sorkin episode, you answer the hard questions. I would love to have you on the podcast, because I will ask you questions you've not been asked before, because I'm struggling to understand how there can be so much gross incompetence, and I'd like to understand that a little bit better. So if you're on your tour and you feel like making a stop and you want more smoke, I consider an open invitation. If you want it, I will gladly have you on the podcast. But other than that, everybody else, I want to thank you for listening. And we will be back again next week. Same bat time, same bat channel, with a little bit more coverage. That's hopefully, I'm wrong about the grade of the price movement that I see. At least I'm hoping that I'm wrong. Until next time, thank you.